Looking back on your career, starting in '79, what has, kind of two-part, what's been the biggest challenge? Along with that, what's been the biggest learnings? And then the third part, what has been your favorite part?
My biggest challenge...
Welcome to REI University with Chris Mers, your premier destination for real estate investing insights. Join us as we chat with industry guests about their journey to success, highlighting the highs and lows of their real estate ventures. Get ready to learn from the pros and take your investing game to the next level. So Dwight, excited to have you here tonight, man.
Thank you.
Yeah, thank you for coming out to Portland REI and the podcast REI University. Okay.
Thank you for asking.
Yeah, of course. Before we start, I really just want to say, one of the reasons that I chose to move to Keller Williams was because I heard of you, right?
Really?
Seriously. And having an owner that's investing and has built a very good name for himself was really important to me. And so I've always looked up to you because of that. And so,
cool. Thank you.
Yeah. So, Dwight, I mean, we know you as, the intro that I mentioned, right? Built an amazing team, doing residential resale, and then also kind of shifting to commercial, building and buying investment properties. But, I mean, who was Dwight before that?
Well, I grew up in Park Rose, if you know where that is, and went to Central Catholic High School. I paid my way through Central because my mom, who was a single mother, said she couldn't help me do it. If I wanted to go, I had to figure out a way to do it, so I did. And then I graduated from Portland State University, and my degree was in business finance. My major was finance and law. And I kind of stumbled around trying to figure out what I wanted to do while I was in college and tried a few different things.
Yeah.
And honestly, I landed in real estate because my mom worked part-time for a number of those years as a receptionist at a local real estate office. And she would always come home and say, oh, these guys are doing so well. They're so smart, and they look so good, and they're all busy, and they're making a lot of money. And I was kind of piqued my interest a little bit. So I went up to talk to the owner.
Yeah.
And he said, well, the youngest person we have here is mid-30s, and I was 21. And he said, but I'll give you a try. So he brought me in and...
Can you pause on that for a second?
Yeah.
I want to rewind before we get into real estate. So you said high school. You paid your way through high school.
Yes.
How'd you do that?
Well, jobs in the summer, basically.
Okay.
My freshman year, it's kind of funny, I'm now 67, so I look back at some things that happened in my life, and I think they're pretty cool. My freshman year, I had to work at the school to be able to get partial tuition assistance.
Right.
And I remember my freshman year, I was mopping the halls and emptying the garbage and cleaning the chalkboards for, on a floor, basically. And that was humbling because I saw everybody else going out to do things after school. And I did play sports, so I had to get it done so I could get out and do my sports. And it's funny because two other people that I was doing that with ended up being 3 of the 5 starters of our high school varsity basketball team.
Oh, wow.
So life is funny that way. I met the center of our basketball team on the first week I was there cleaning garbages and rooms. And but I had a passion to go there. I'd gone to some of their athletic events. I thought they were very exciting, and so it was going to happen one way or another. And then when I was a sophomore, I probably must have been 15, I got a job at Albertsons as a bag boy in the summer, and actually made pretty good money because it's a union. And so I continued to be a bag boy through the year so I could make money, and they let me do it on weekends and maybe, one night a week. Like I might work a Friday and then a Saturday and a Sunday for a few hours each time. Because the neat thing about that industry is they have 4-hour shifts, and that worked really well for me. So I would do a Saturday night and a Sunday night and have the full days off to do my homework and sports and everything else. So, and that's honestly how I worked my way through college too, is I just stayed there and continued to do the same thing.
Well, I mean, I would imagine, that's kind of been you working at a young age and kind of building your career that way has been critical throughout your life, I would assume, especially as an entrepreneur.
It definitely has. I look back at the grocery business, and by the time I was probably 20, I was a grocery manager. And they made a lot of exceptions for me, so I could go to college and come home and work, and then go, they worked around my college schedule, which was great. I worked hard, so that's why they were willing to do it. But
what grocery store was it, did you say?
Albertsons.
Oh, that's so funny. My dad literally did the same thing.
Did he?
I'm not kidding.
Oh, I have a lot of friends that did. It was funny because I was
so
talking
funny.
earlier about how many friends that it's funny, we did track and football and basketball and everything, and had a lot of friends working at Fred Meyer and Albertsons and Safeway, and it was really a good job for the day. Yeah. So.
And so, were you saving a bunch of money, or were you like, okay, well, I'm working through and I'm paying for schooling?
I wasn't really saving money at that time.
Okay.
I didn't really save money until I got into real estate.
Yeah.
Yeah.
Do you have any siblings?
I have 3 sisters.
3 sisters.
Yeah.
Older, younger?
2 older and 1 younger.
Okay. What was that like growing up with all sisters in the house?
Well, as you can imagine, there's a lot of energy.
Yeah. How many bathrooms were there?
We had a 1-bathroom house.
Okay.
So I, as the boy, was last up. So my sisters all got started earlier, and I was the last to get the bathroom every day.
Yeah. Yeah.
It's funny because I look back at that now and you think, gosh, 1 bathroom, that's weird, but we worked together.
Yeah.
Improved timing, and I had to get up early. I had to get up early to be able to get the bathroom on some days to make sure I could get it. So.
Well, and it was more commonplace.
It was, yeah.
Yeah. Okay, so went to Portland State, business development.
Yep.
Were you still living at home? Did you move out of the house?
Well, I moved out my junior year and actually started real estate for a few months, and then I realized that I was pretty good at it. And so I thought, I only had like 18 hours of class to get my degree. So I decided I better move back home so I could actually get it finished without having to do all the things I was trying to do. So I tried real estate. This was in '79.
Yeah.
I tried real estate for the summer. I did well at it. I thought, I like this. This is fun. I'm around real estate. I want to own real estate. I wanted to own real estate from a very young age. And then, but I was so close to getting my degree, I thought it would be crazy for me not to finish and get my degree. So I moved home, finished up with school, and then started selling again.
Yeah. Okay. And you mentioned your father?
Well, my mom and dad got divorced probably when I was in 7th grade.
Okay.
And so, 6th grade, 7th grade, 8th grade, my mom was basically running the show.
Yeah.
And she was a real champion and had to be with all the emotions that were running in the house. So.
I can imagine. 3 girls.
3 ladies, yeah.
How was that going through a divorce in 7th grade with your parents going through a divorce?
Yeah, it was hard. I think, honestly, as I look back, my oldest sister was 4 years older, so she was, sophomore, junior. But my youngest sister was 4 years younger. And I think it hit her the hardest to have my dad leave the house. And, truth be told, he had a drinking issue. And so that whole thing for her didn't go very well in the coming years. For me, It hurt, but my mom stepped in. She was a very strong personality, very competitive person. She used to say to me, when I was playing basketball in grade school, she would say to me, "Now, if you don't win, don't come home." She'd joke and hug me
Totally,
and
of course,
everything,
of course.
that was the thing. If you don't win, don't come home. So she was competitive. So, and I have been competitive in my life. So
Yeah.
probably got that from her.
Yeah. Apple doesn't fall too far from the tree.
No, I think you're right.
That's great. And still, it sounds like you have a good relationship with your mother. Are you still in contact
She's
with
passed.
your father?
My mother's passed. My dad passed.
Okay. Yeah.
So, yeah. We just have, between my wife and I, we just have her mom left of our grandparents. So,
Yeah. Yeah, that's the one thing we all share in common in life. We're all marching towards death.
unfortunately, it comes fast, very fast.
Yeah.
I've enjoyed real estate, but it's a fast career because you're always busy. There's always a million things going on that you can think about that you have to execute. And if you enjoy it, it makes life go by really fast. So that was the downside of working in real estate. I enjoyed it. I was good at it.
Yeah.
But life has sure gone by fast.
So let's get into real estate.
Okay.
So you're 21?
At that time, I was probably 21, yeah.
21, and you had either finished or you were close to finishing. You had
Right.
like 18 credits left, it sounds like.
Right.
And what office did you go? You got licensed?
It was a small office called Georgetown Realty. You probably haven't heard of it. They were only on the east side.
Okay.
Out, Park Rose,
Yep.
Gateway, out
Okay.
in that area. So, and they had 25 brokers, and the co-owners were selling and owning. And it was an older, mature group, and they sold real estate like crazy. In fact, several years later, it was the #1 selling real estate office in Oregon.
Wow.
And they had like 30 people.
Whoa.
Yeah, but they were selling a lot of stuff. Everybody was very, very busy.
So 79 is when you said that was, right?
79, 80, and then into 81.
Okay, so that's when, I'm just, know from history, that's when interest rates started to skyrocket in the early 80s.
Yeah.
Right? So
Yeah.
was leading up to that point, was the industry doing very well and moving? So you kind of got into a good time before shit hit the fan?
The industry, when I started, rates were in the 9s in 2000 or in 1979. And real estate was moving well. You just had to know people, and everyone was doing really well. And then rates went to 10, and then they went to 11, and then they went right to 18 in 81. And that was like hitting a brick wall in Oregon, because most people here probably aren't old enough, but in Oregon, at that time, we were a timber state. Timber was the #1 industry. And of course, with high interest rates, housing was crushed. The timber industry was crushed. The government call was, we have to get another industry in Oregon. We can't do this. This timber is, has wild swings in terms of the business cycle. So that's when they started to try and nurse companies like Intel and Nike and other companies so they could diversify Oregon. But back in the day, it was hard, and East County was especially hard. So by that time, I had actually purchased a couple of rentals, and I was flying along buying rentals as soon as I could get a little bit of money. But then all of a sudden, when the rates went up, just after that, like in 82, recessions usually start within 6 months to a year after they have peaked with increases in the rates. So for today, we're right at the point where if we're going to have a recession, it's probably going to be next year. So in that time, people were getting laid off, and I had a number of tenants that were laid off and couldn't pay rent. And so...
Oh, because you had already bought a couple rental properties.
I had like 3 rental houses when I was 22.
What?
But all 3 of them stopped paying rent.
No.
And so I learned the hard way, you got to have some money in the bank.
Yeah.
So everything I earned was going to subsidize those rents, and then trying to get people out that didn't have a job, didn't have anywhere to go. It was a tough time. I learned very young how difficult it can be if you don't take care of it. So,
And at the same time, if I recall correctly, I've heard people kind of reference this time period similar to the early 80s where they were trying to reduce inflation. Inflation was skyrocketing at that point. And so the Fed raised rates at a very quick rate to bring inflation back down.
Right.
Right?
Yeah, that's when Paul Volcker came in and raised rates from 11 to 18% in 1 year, basically.
That's insane.
And just put the brakes on real estate. You can imagine suddenly, how do you sell a house with 18%? We didn't. Nobody in my company ever did anything that high.
Right.
So we had to switch to people selling on contract.
Oh.
That's what we had to find, is people that had enough equity that they could sell on contract.
Had enough equity, or they just owned it outright.
Yes, correct. Yeah.
Right.
And so those started to emerge, and that's what saved us for a few years until the rates came back down in like 83, 84, 85. Because, they don't come down. The market didn't work at 18, it didn't work at 16, 17, 16, 15, 14, 12, 11. By that time, even 11 didn't work. But on the other way, 11, I was selling a lot of homes in the 11% range.
Yeah.
But
prices at that point were much lower.
Much lower, yeah. I was selling homes under 100.
Right. Mm-hmm.
Yeah.
Crazy. So during that time period from 79 to 85, and buying some investment properties leading up to 81, what were some of the biggest lessons that you learned?
Well, number one, have spare cash flow in the bank in case of a rainy day. That was lesson number one. I started to try and figure out what properties had a better chance of staying vacant in a downturn as compared to others. And so, for example, I've always recommended to my clients that are just trying to get started with investments that just try and buy a 3-bedroom, bath and a half or 2-bath, 1 or 2 car garage house. Mm-hmm. Just a flat ranch. Because in my entire career, and it's even more so now with all the baby boomers, moving down, trying to get one levels, those always stayed rented first. Yeah. And as soon as you went to a 2-bedroom, or as soon as you went to a single bath, or as soon as you went to no garage, it just took a lot. They didn't stay as full.
Yeah.
So for many, many years, that was when my clients came to me and said, hey, I want to buy a rental, I'd say, well, let's go find, this is what I want you to own. Because this will go up the most amount of money and you'll have the least problems as a rental because it'll stay full.
Yeah.
So I learned that along the way too, because by that time I had been, I was at four houses, 5 houses, 6 houses, 7 houses, and I just
how were you buying these houses? You were just selling enough that
a lot of them on contract, because really? People would say, tax rates were higher then. Mm-hmm. Ronald Reagan lowered tax rates, so people when they sold an investment property, for example, they didn't want to pay 75% taxes, which is what they were back in the day. So if you did an installment sale, you spread the tax pain over the years. Oh. And so it was actually a viable way to have a tax saving strategy. Yeah. So for example, if you were working and you said, well, I'm going to retire in a couple of years, so I want to sell this house now so I don't have to worry about it. And if I sold it and you had all that gain on top of your income, you'd be pushed up into 75% tax bracket before you knew it. And it's not fun. It's not fun working when your taxes exceed half of the income you make.
Mm-hmm. It's insane.
It's hard to motivate yourself to do that because you realize what's happening. You're giving it to the government and they generally are not very efficient. Mm. So
was there ways to reduce besides doing seller carries, was there additional ways to reduce your tax burden at that point?
For owners, not really. Mm. I mean, there are many more tools today, for people to do DSTs and other things, right. Where they can kind of convert it to a managed account. Yeah. But no, it was much simpler back then. It was really very simple. Here's what you're going to pay in taxes, and you shouldn't do this. So let's sell it on an installment sale.
Yeah. Sounds like
now
much
when
easier
rates came back
conversation.
down, that disappeared because as soon as we got down to about 10 again and probably 84, 85, then it started going, mortgages started taking off again. So,
Okay.
and we don't see very many today, right? We don't see many installment sales today. But it still is a tool to minimize your tax bill for,
Totally.
trying to get your principal paid off when your income is lower down the road.
Yeah. I mean, there's a handful of investors in this, community that's all they do,
Yeah.
right? Is look
Yeah.
for those. Okay, so you make it through this time period, rates come down, you're still at the same brokerage, Georgetown.
I left the brokerage in 86 and I came across the river to Hendale, Hassan and Jones. Does that name probably doesn't even ring a bell, does it? So it eventually became Mike Hassan Company.
Yeah.
So he and two other realtors left Windermere, or no, not Windermere, they left another company. I probably don't remember the name because I haven't heard of it for many years, and then started their own company. And a friend that I was working with went there, and he kept saying, you need to come out here, you need to come out here. And so I thought, well, maybe, if I'm good at this business, but the prices are more expensive on the west side, maybe I should go look. For the same effort, I might be twice the value of a house, right?
Yeah.
And so I moved. So I was married at that time, or getting married, and we decided to move, and we moved to a little apartment right off of Cruise Way.
Oh, really?
Yep.
So really close to here.
Very close to here, yeah.
Oh, that's awesome.
Yeah.
What's your wife's name?
Lisa.
And when did you guys meet?
We met in, 82.
Okay.
Yeah.
How'd you guys meet?
She was a friend of my sister's. So my sister also went to Portland State. She went to Portland State. They met. And then my sister tried to match me up with her for a while. And finally, I agreed to do it. And
So you just went on a blind date with your sister's
honestly,
friend?
what we did, you want to know what we did? We weren't running.
Oh.
I was a runner. I like to run in my free time. And I love basketball, so I did that. And she liked to run. She was a runner from Barlow. And when I heard that, I said, well, let's go running, because I don't have to spend any money to see if I like you.
See if you can keep up with me.
Yeah, well, so we met at Glendevere.
Yeah.
And Glendevere has a beautiful cedar track around the outside, which we did many, many years of running there. And so we ran, and then got an ice cream cone.
And hit it off?
Yeah. Yep.
At what point?
I didn't have a lot of money in the day. I mean, I bought rentals too quickly, and I got caught up in the excitement of owning rentals, and I didn't build up enough in reserve. So I wouldn't say I had a whole bunch of money.
Yeah.
But I had rentals I had some rentals that were worth less than what I owed on them, and that's kind of painful too. So I bought them in 81 and 82, and then they went down in value. So.
But eventually, you hold on to them long enough.
Yeah, I mean, that's
You're gonna do well.
one of the lesson number 2 is, it's like stock. If
Just hold.
there's plenty of stock that you can buy, they'll go down in value, but in the long term, you make 100, 200, 300%, right? So if you think of real estate that way, you're going to be a lot better off than if you think of it as a short-term investment, unless you're a flipper, right? That'd be the only exception.
Yeah. So at what point did you know that your wife was the one?
Well, we dated for probably 3 years, and then she basically said to me one day, I don't feel like we're going anywhere. We're just dating, And I didn't feel like I was ready to get married, so I said, okay, well then maybe we need to be free to go see other people. And so we did for 3 or 4 months, I guess, maybe 4 months, 5 months. Don't remember what it was exactly. And then I happened to see her somewhere, and I thought, as soon as I saw her, I just had a feeling like, oh, I'm so happy to see her, and I thought, okay, I need to probably marry this lady.
Yeah.
So anyway, that's what happened.
That's awesome. And I went to school with your oldest son, Marcus.
Marcus, yeah.
You have 3 boys.
4.
4 boys.
Yeah.
And how old are they?
Marcus, who works at Boeing in Troutdale, is 35, going on 36 in January.
That sounds right, yeah.
Yeah. And then Cameron, who works in real estate with us, he's 18 months younger.
With
He's
Schwab team.
with Team Schwab, my team.
Yep.
And he does commercial real estate. And then Connor, who is probably the class of 2010. And he, right now, the industry he's in is the glamping, kind of hospitality industry around glamping and tiny homes and that sort of thing. And he just quit his job for a company, but he's hoping to get hired by a pair of guys that are actually building them so that he can join their team. So I haven't heard if that happened yet or not. And he's doing a podcast too.
Oh,
so
nice.
Yeah. And then the little one is down in San Francisco working for Deutsche Bank. Yeah. So
very cool. Okay, so let's go back to you and your wife move over to the west side, Cruise Way, just very close to here.
yeah.
And you went and worked with what is now, or not Hassan anymore, but the name of the company.
Handel, Hassan and Jones.
Okay, Handel, Hassan and Jones.
And then after several years, Mike bought his partners out and he named it the Hassan Company. So I was there for 27 years.
Wow.
Yeah. Which was a long time.
The same location?
Was the same location.
Wow.
Not in his new building. He was in that the building that has the dentist in it now. It was a Ginger Jar many, many years ago.
Okay.
And when that was for lease, he leased it and our office was there. And then he built his new building, which is now for sale.
Oh, I didn't realize that.
Yeah.
Okay.
Yeah, they sold the Hassan Company to Sotheby's, and so
Right.
I'm not sure where they've landed yet.
So how was that working with Mike and then also his partners?
They were great to work with. I mean, they all sold real estate. They were all very busy. There wasn't any, weird oversight or anything else.
Yeah.
You were free to go, real estate, you're an independent contractor, so you got to go make it for yourself. So
And what
it
pulled
was a
you,
very good company to work for.
what pulled you there? Was it
Well, my friend was there, and I was working very hard, and I thought, man, for as hard as I'm working, I'm not making enough money. So part of it was the model that I was at, the broker kept 55% and the agent earned 45%. And then on that, we paid expenses.
Yep.
And by the time it was all said and done, I was, selling $100,000 homes and making $2,000 or $2,500. I thought, okay, this is not working for me.
Yep.
So if I'm going to make it in this business, I have to keep more of my money and I have to raise the sale prices. So he was the 90-10 model, where you pay a little bit like we do it. He's the same model as Keller Williams is, where it's capped on what you pay and, whatever you earn over that, you keep 100% of.
Yeah.
So I like that model. And that once I went to that model, my income went way up. It's probably a reward thing, you actually hard work and you keep more of your money. You actually like working hard.
Totally. I think it's a great model. So, married now, having kids, here in Lake Oswego, continuing to invest?
All the way through.
All the way through.
Yeah.
What are you buying?
Well, I was buying single-family houses probably until, I think I bought a commercial building in 87.
Okay.
Probably my first commercial building in 87. I traded a house for it that I had that I was paying down. So my theory was buy a really good solid house in a good solid neighborhood, get a great price on it, and then as I have extra money, pay the load down a little bit so that I can build up equity, and then when I found something I wanted, I would do a tax-deferred exchange. And so I lined up a whole bunch of houses that I thought worked well that way, and I earned extra money, and I saved money, plus I paid on some of them because the interest rates were higher than I wanted, so I used cash to pay them down. And I bought a 11,000-foot commercial building in 1987.
So you exchanged a handful of houses.
Just one.
Just one.
Yeah.
To go buy a commercial building.
Yeah.
Got it.
And so once I did that, I thought, this is kind of nice. I like commercial actually better than residential. So over my life from then on, I was trying to exchange rental houses into commercial. Part of it was because we had 4 kids at home. My wife was the bill payer. I worked. With number 2, she decided to stay home because we looked at the economics and thought, you might as well just stay home. And she loved being at home with the kids. And so she paid the bills. And as we had these rental houses, it was kind of a pain to do all the bookkeeping. And so I realized I need to have a plan to get out of single family and get into things that can be managed by third parties.
Yeah.
And so we've done that now.
So what was your first commercial property you bought?
It was during the savings and loan crisis in the 80s. I bought a 11,000-foot bank building down in Salem.
Remind me what that is.
So we used to have savings and loans and banks, U.S. Bank, First Interstate, but we had savings and loan by like Benjamin Franklin's savings and loan. And savings and loan were like your home banks. Like On Point Credit Union is today. You had the mom and pop kind of business, and they were local, and people would put their money in, and CDs and everything else. And they ended up having a crisis. And so that was back in 87, 88, 89. It was called the savings and loan crisis.
Yeah.
And basically they were all closed.
Got it. So a bunch of banks were shut down.
Yeah. And so, in the day, as a realtor, I was working with the banks to sell their stuff. And my account manager...
You went to commercial. Now you shifted to commercial and you're helping sell those banks.
I'm selling residential.
Got it.
And my account person at the bank would take all kinds of things back. And so she's the one that said, hey, I have a property you might want to buy. And the deal was, when you get foreclosed on, they take like everything that you have, right? And then they sell them off. And as long as they get paid, the rest of it, they'll cut loose at pretty good deals. And so I was in that position as the realtor of choice. She would tell me about deals. So I bought 20 acres in Lincoln City for $26,000 in 1989.
Wow.
Yeah, it's pretty cool.
Yeah.
I bought she told me about a building in La Grande that was being taken back, and it was an old Mason's building. It had huge one-level open floor with a stage in the back where they could have entertainment and whatnot, and then upstairs were 2 apartments, and then in the basement were 2 apartments. And it was in La Grande, Oregon, so I didn't really know a lot about La Grande, but I thought, I bought it for $27,000 or $28,000. I thought, well, I'm going to go look at it for that price. So I ended up buying it and fixing it up and then selling it about 5 years later.
Yeah.
But so I picked up gems like that because it was timeliness. They were closing down the savings and loans and foreclosing on a lot of things back in the day.
And you were then just exchanging your houses to then go buy them.
For those I paid cash. I didn't exchange houses, but I exchanged houses into other things. Yeah. Yeah, bigger things.
Got it.
Yeah.
So it sounds like during the savings and loan crisis, you're starting to buy more of these commercial properties. And then, you have some larger commercial properties as well. At what point did you kind of scale from these smaller, medium-sized one into some larger commercial?
As my income went up, that kind of drove me wanting to get more expensive properties because I could qualify for the loans,
Right.
And so we did Forest Heights. I told you we did Forest Heights. I had a call from the developer's daughter, who was a realtor. And she said, hey, I've worked with you on a lot of deals. I know you like new construction. My dad's going to sell this property, and I just want to know if you want to be the buyer of it.
And it's dirt at this point.
It's dirt.
Yep. Okay.
And
this is the commercial portion of Forest Heights.
And the apartments across the street.
Oh, I didn't realize that. Okay.
Yeah, so I called a friend of mine because it was more than I could afford by myself. But I called a friend of mine, and we bought both of them together. And I think I traded 2 houses in. he worked with us because it was off market, so he gave me a little time to sell some things. And so then at the end of that, we owned both. And
was that your first new build?
no, I joint ventured on single family with some of my builders.
Yeah. So at what point did you jump? I know at a certain point you were working, the majority of your business was working with builders and helping them sell their subdivisions. When did that happen?
Well, you know,
coming
coming out of the 80s, we had an extreme shortage of houses. And there was a lot more land available, you know, for the builders to find. Excuse me. And so in the early 80s, I liked working with builders. I had a few builders that had been referred to me and I was selling their houses, but then the rates went up and that took care of that business. So they couldn't build and we couldn't sell them. But then as the rates came back down into the later 80s, they all got back and started building again. Yep. And so I started working with builders in the late 80s. And basically I've worked with builders until probably 4 years ago. So I've enjoyed that part of it. I think that part of real estate is fun for me because it's more creative. And I'm pretty hands-on about it. So, you know, I would find the site and say, you need to buy this site and here's what we need to build. I'd go around and find out other builders' product and I would get pictures and we'd go through and we'd take the designer through and we'd design custom plans. And because I felt like if I'm going to sell them, I want the product to be what I know is going to sell.
So you're kind of driving, a big driving force in that.
Yeah.
Wow. And that was some of the value that you were bringing to
That's part of the value I was bringing, yeah.
Yeah. Providing the deal and then also saying, hey, here's the finished product that this should be. I know that this is selling the best. Yeah. Wow.
At its max, probably by the late 90s, I think I had 12 subdivisions listed with 4 different builders, and I had people in each subdivision holding the houses open on the weekends and during the week, and plus selling resale.
That's with Team Schwab.
That's when I was the busiest.
Got it.
Yeah.
Doing resale and doing new construction.
Yeah.
Wow. How many people were on your team at that point?
I probably had, well, depending on how you look at it, I had 5 close people on my team, but then I had more people working for me in the development, and so we were trying to develop scripts for open houses, trying to train them how to do new construction. So depending on how you look at it, 20.
Yeah.
But my immediate team was 5 of us.
And when you were doing those, I'm sure your income you were doing very well because you were. It sounds like you were selling those very well.
Yes.
Right.
Yes.
Like you referenced before, like there was one month that you sold a handful of properties and did very well, to me in the past, and then you said, oh well, now I've got all this additional income, and now I'm going to go deploy this and to do some more investments of my own.
Yeah, as the sales started happening and the income started building, I wanted to buy more expensive properties. You know, the theory being, if you own a $500,000 house and the market goes up 10%, you make $50,000. But if you own a $5 million property and the market goes up 10%, you make a lot more money, $500,000. So the theory was, I want to get as many more expensive properties as soon as I can so that I can enjoy their appreciation and then the amortization that was happening by the tenants, you know, paying the loan down.
Right.
And so that was my peak of income, was around 1997, 8, 9, 2000, 2001.
And are you also taking advantage of some of the tax benefits to depreciate your tax burden?
We were doing cost segregated depreciation, absolutely.
Yeah. When did that come about?
I don't know when they started it. I know I started it in the 90s.
Okay.
So it probably was, it would have been before that.
Got it.
Yeah.
That's awesome.
So cost segregated depreciation is when you can kind of break up what you bought into pieces and then assign different lives to them, so that instead of a light bulb, the light fixtures having a 30-year life, you can assign a 10-year life or 5-year. I'm not sure what those are right now. And it allows you have a bigger deduction. So when I'm making more money, I wanted the biggest deduction I could have.
Yep.
So I could shelter the most money. Mm-hmm. And that's what we were doing.
Right. So I'm assuming during this time period, I mean, as an entrepreneur and investor, like, we all can agree here, like, there's a lot of personal development that goes along with that. Mm-hmm. I would love to hear about your personal development journey along this path.
Well, there were things I realized about myself. One of them was single-family homes is a great place to start, but the real money is made as you go up. I like being creative. I like building and I like developing. And so when we did Forest Heights, for example, I realized that this is fun. We created like the village center there, all the designs and everything. We started from scratch with an architect, and the apartments from scratch, the townhouses up there from scratch. And I realized that I really liked that. What I didn't like was the amount of time that it took. For example, to get the permits on the apartments took 4 years because we had so much neighborhood opposition up there. And I got to work on my public speaking because I got to be the one to stand up in front of everyone up there at the neighborhood meetings. And they were mad. I thought people were going to throw things at me. And that parcel was zoned for apartments. But people got used to having it all be natural and beautiful. Yeah. And somebody said there was a salmon up there once on a property, which there's no way. It's like, are you kidding me? Like finding a salmon at Timberline Lodge. So anyway, I had to do a lot of that. So it helped me develop a little bit thicker skin because I had a lot of people that said really mean things about me, being a developer. And, but once it was built, then the opposite happened. You get all kinds of compliments, and we should have had that a long time ago. It's so beautiful, and whatever. So I had to get a thick skin. I learned that for me, where I was going with my income, I had done some flips, and I thought, for the amount of energy in these flips, there's not enough money for me for selling full time and then trying to do this. Yep. So I stopped doing that because I thought, I'm not making enough money for the amount of time that I'm putting in. I really need to spend the time, designing and building a 10-plex or something where there's a lot more money. But that happened because my income was going up too. Yeah. So, real estate can happen. The path of real estate can be a million different ways, and you would customize it to whatever your opportunities were. I was in a situation where my income was going up, and I did not want to pay taxes. Mm-hmm. So before Reagan lowered taxes, the top tax bracket was 75%.
That's crazy.
And I was having years where I was paying in the 60% for the top dollar I was making. I was like, I remember sitting with my CPA, and I said, will you break this down for me? How can my taxes be this high? And he said, well, you're getting taxed this and this and this. And I said, well, who would work for this? Like, who would work to earn money and pay 60% to the IRS? Well, and then Reagan, he lowered capital gains and everything else down. So from that point on, it became better. Mm. So I had to work with the limited time that I had to work with things that would make me more money in a single opportunity. And then I was matching my investments to the amount of money I could afford to get on a loan. Mm-hmm. And then, as you start to do that value range and you have proof, then the lenders are a lot easier on you in terms of you being able to get loans and have a track record of success, right? So that all tended to evolve.
So at this point, you're working with builders. You are doing a lot of business with them. Are they aware that you're now going out and building and developing and investing on your own?
No, I never told anyone what I was doing. Me, my wife, and I. Some members of my family knew, but it would not serve me well to have my clients know what I was doing.
Got it.
So I was very quiet about it. I think some people see some heads shaking.
Yeah.
It wouldn't serve me well. If I'm charging a fee to homeowners
Right.
and they realize I'm making a lot of money over here, then it would be harder. So, I did it on the QT.
Yeah. Okay.
Now, over time, the projects got big enough that I would start getting phone calls from some of the builders like, well, you don't need this money. You need to help me pay for this. And so, I had to develop a thick skin around that too.
Yeah.
But, I've kept it on the QT.
And so then why, it sounds like you really like the creative process of development. So, was the thought process to ever kind of move away from being a realtor and having a team and just be a full-time developer?
That is a very good question because I asked myself that many, many times. But, with Forest Heights, it took 4 years just to get the approval. And then we couldn't build it because interest rates had changed. And I thought, this would drive me crazy. Thankfully, I have my regular income that comes in.
Right.
And I had a pretty good team. I had designed a pretty good team. So I had several hours during the day where I could focus on my investment stuff. And so for me, for just doing a few, it would have been too hard. I would have had to go all in.
Right.
And I like selling. I liked working with a lot of different people throughout the year, and I liked the idea of getting them from point A to point B the way they want it to be. And so there were things about it that I really liked.
Yeah.
And so I knew I just couldn't make the transition to full-time builder.
Got it.
For a number of reasons.
Yeah.
And that was probably smart because I know in 2006, we'd sold the last of our townhouses up in Forest Heights. We built some townhouses right below the village center.
Got it.
And I could see my real estate market starting to get really hard. Rates were going up. They had just raised interest rates. They were raising interest rates. And I could see that the residential side was getting tough. So my partner found other properties and wanted me to go in on them. And I was like, no, this is not the right time. I'm going to keep my cash. And he did and lost his ass. So the real estate, being fully involved in the real estate, honestly, probably kept me attuned with where the rest of the market was going to go.
Yeah.
And that worked very well for me because I sat on my money until 2010 and then started buying stuff.
Did you have to change your business model during 2007, 2008 to then make it through the recession?
Well, backing up.
Yeah.
So in about 2020, when we had my wife might have been pregnant with number 4.
In 2000.
in 2000. In 2000, yeah. 2000.
Got it. Okay.
Basically, she had a come to Jesus meeting with me and said, this isn't working for me. I need you at home more. I feel like I'm taking care of the kids and you're out working, which was pretty true. And so I said, okay. So I cut way back on my business and let some builders loose that maybe weren't as good as other ones that I liked. So I basically cut my team back to just 3 people and said, okay, with 3 people, I can make this amount of money very consistently, and this money gives me what I need to do the investing that I want. And so that happened right around 2000, 2001, 2002, somewhere in there.
That is
and
amazing.
she was right. I knew I was working too hard.
That is amazing.
Yeah.
One, for her to call you out on that, to have a come to Jesus moment. How did you feel about that?
Well, I was very, very successful and getting a lot of visibility in the sales world, and that side was all good. But I also knew that I wanted kids to be with my kids. So the challenge with me having an alcoholic dad and having the kids, my parents split, was I didn't want that for my own kids. And so when she basically, we had this conversation, I said, you're right. My relationship with you and my kids is more important than what I'm doing. And so I basically cut in half what I was doing. like over the next 6 months.
Wow.
Yeah. Which I'm glad I did, because then they were all rolling into sports, and that created a life of its own.
Totally. And that is, you probably had to then kind of decide, okay, who is causing the most stress?
Yep.
Where can I be most effective? And how can I be the most efficient with my time to then be able to spend more time with my family?
Exactly. I had to look at everything I was doing and say, do I go forward with this or do I give it up?
I literally just finished Dan Martell's Buy Back Your Time. Such a good book. I took so many things from that book, but it just reminds me of, like, I'm assuming you probably went through a very similar process of just trying to be as effective as possible to be able to spend more time.
I think that period in my wife's and my life caused me to be just vicious as far as time management.
Yeah.
Because I really had to be.
And how old were your 4 kids at this point?
My youngest was born in 97, so he was probably 4, let's say. So my oldest was probably 9.
Okay.
All moving into sports, you know. And I coached him in football and basketball and did a lot of coaching.
Yeah.
Probably more than I should have, but it was important to me, and I enjoyed the heck out of it.
Totally.
And
that's what matters.
You know, so it was the right choice. It changed my trajectory on, you know, what I could have done, but that's okay.
Yeah.
I would do the same thing again.
Yeah. I guess you probably had the question. You had to ask, like, do I want to be a good father and a good husband, or do I want to be known as a big, developer and realtor? Yeah,
exactly. And, you know, the reality was a number of the builders that I'd been working with were divorced or getting divorced or, not doing well. And I thought, okay, this is not why I got married, and this is not why I had kids, so I don't want to be one of those if I can avoid it.
Yeah.
So it was all good. I don't have any second thoughts about it. That year when I was transitioning, it was hard because I thought, someone would come to me and say, hey, I've got 180 lot subdivision. Would you sell it for me? And I'd be like, yay! So.
Yeah. But could you then refer the business so you still get a cut of it?
But not really, because there's selling houses in subdivisions is a very different game. You can't get a cut on everything. It's not fair.
Yeah, that makes sense.
So I did refer it out to people, but
yeah, that makes sense.
I didn't really make any money on it. But that was okay. I mean, I still had a good, I settled back into what I felt was the best team that I could have and just continued to invest.
So at that time, I mean, I'm assuming your wife called you out on this, so I'm assuming then, like, the marriage was maybe a little bit rough. You guys were maybe going through some arguments at that point, or no? It kind of...
I wouldn't say. Well, we probably had some arguments. I mean, I wouldn't say it was really rough.
Yeah.
My wife is, knows what she wants.
Yeah.
And she's very clear about it. And
that's good.
There wasn't a lot of negotiating.
Yeah.
So it's like, if I want my marriage to thrive with her, I have to do this. Yeah. And I said, okay, then I'm going to do it. But we didn't have any knockdown dragouts or anything. That's cool. We had good conversations.
One of my dad's best friends, he's kind of like my uncle. We were playing golf recently, and me and my brother were out playing golf with my dad and him. And he said, Chris, I don't know if we've told you this. We were having some beers after the fact. He said, we're part of the No Divorce Club. And so I want to make sure that you, right, coming into this, that you are part of the No Divorce Club. Like, you just make it through it. You chose your wife, right? And it's not going to be easy. It never is. No relationship is. But you work through it with that person. And I absolutely love that, right?
Being married is a little bit like doing a big development.
Yeah.
The harder it is, the more you appreciate it when you get there. Mm-hmm. So, not that my relationship was hard with my wife, because she's amazing, but now we're at going on close to 40 years.
Wow.
So
That's so cool.
Now I look back and think, I'm glad I had my priorities right. I'm glad she called me out on it.
Yeah, totally.
Could have ended a different way.
100%. Okay, so now you're really kind of delving more into family life and coaching and cutting back on business. Oh yeah, that's where we were during the Great Recession. How'd you make it through the recession?
So the Great Recession, I remember very clearly because I had my oldest rolling off, and he got accepted to Santa Clara, which is, it could have been Oregon or Oregon State, but he got accepted to Santa Clara, which is private college out of state. And
we graduated in 2007, so this is like literally right at the
September
beginning.
of 2007, he was down at Santa Clara, and that was just when the Shearson thing happened. And so then he was followed by his two brothers, who all went there. So for me, that was really more about, this is going to be crazy to pay for all this tuition, and I might need to get my head straight. Because I wasn't buying anything because the market was just weird. Prices were weird, a little bit like it was, a year or two ago. And things just didn't work very well. And so I was sitting on a pile of money, thankfully, waiting. And then my kids started rolling into the same college, and good for them, but it, took a lot of money to do that. And so I really didn't do any investing probably until nothing for 6, 7, 8, 9, 10, and then in 11, number one rolled out. I could see the light at the end of the tunnel, and I started going out again and starting to invest. Because one thing that was important to me is I didn't want to have to call the kids and say, I can't afford to help you stay there. You have to come home.
Totally.
And I thought that would be very hard on them and maybe harder on me. And so, I burned through a lot of money to get them through college. But at the time, we told them you have to pay half of it back.
Did you have to sell any assets?
We did. We actually, and it worked out quite well. I had a rental house that I bought in Lake Oswego, and a builder told me about it, and he wanted to split it into 3 lots. And so I bought the house because he couldn't do it because the credit lines were maxed out. So I bought it and was renting it. And then the economy got worse and worse. So I think back in about 2010, I told my wife, because I wanted more money in the bank, because it was hard back then. So I could tell that we were going to start to see some deals. Plus we had kids in college. So I said, well, let's sell our house because we can take that $500,000 exclusion on our house, and let's move into this rental house, because the rental house was actually bigger than the house we were living in. So she was all up for it because it was a bigger yard and a bigger house. And so I spent some money fixing it up, and carpet and paint and new counters and things. And then we moved into it and took that $500,000 that we'd made on our house and put that in the bank.
Smart.
Yeah. So that was probably a brilliant move.
Yeah.
As it turned out. Because then number 4 went there too, and it was like, ugh.
Do you still live in the same house?
No, I found a house that my builder was building in 2010, and I took my wife through it, and I said, I think we should buy this. This is a cool house. Master on the Main.
Yeah. Nice.
Good for growing old. Very private backyard, backs to a park. So
Here in Lake Oswego?
Yeah. So we bought it back then, and that's where we live now.
Very cool.
Yeah. But we sold that rental house. When I found this house, then we sold that rental house to that builder, who now is coming back out and growing, and we sold it, and we actually made more money on it by holding it than I would have made if I would have just done it in 2008.
Well, and you also then, when you sold it, you probably didn't move out, so you got then also the 500 as well, or did you?
We did, because
it was
we
primary.
only be in it for 2 years, so then I had another exclusion.
That's awesome.
Yeah, my wife she was all up for it too, because we were in a very close alignment about not wanting to call her kids and say, hey, you need to come home because I can't pay for your college.
Yeah.
Which wouldn't have been the worst thing, but it would have been hard for me.
Yeah.
And I know it would have been hard on them because I had some clients that did it, and they were telling me the stories when I was sitting with them, to sell their property. They were telling me the stories of how that went. And I was just thankful that we were able to make it through.
Yeah.
Yeah.
I mean, the partner that we choose in life, right, it has to be so supportive of our career choices, especially as an entrepreneur. Like, gosh, I'm so blessed. My wife tells me, like, every month, like, I know you are going to crush it. Like, she's like the most supportive. How has that been with you and your wife?
My wife, she has, she gave me the freedom to do what I wanted for all those years. Mm-hmm. And then when it got to be too much, she said, this is not working for me. And it was true because at that point we'd been married for, 15 years or something. And I could tell it was, I needed to roll it back. So she's been great. Like, when we needed to move, we both agreed that was the thing we should do to make sure we had enough money to get through. Mm-hmm. When you're in a deep recession, you never know when you're going to come out of it, right? That's always the magic bullet, is trying to figure out, is this going to be a year or do we have 3 more years? Well, in the 80s, when the rates went to 18%, I was still, I was making good money, but the market was very hard in 87. And then we had another crash in 87. Mm-hmm. Probably don't remember that, but the stock market crashed in 87, Black Monday. Mm-hmm. And so, we went to 18%, the rates started coming down, 83, 84, we're starting to get reasonable again, business starting to get good, and then the stock market crashed 20% in one night. That was 87. So, and then Persian Gulf War in 90. So that decade was
rough,
was uncertain. Mm-hmm. And, in our business, you get this farmer's mentality where, you got to make hay while you can. And so, somehow we got through it and it was all good. But I can tell you, I had some rental properties that were free and clear in the Great Recession, and they were helping us get through on things.
Really?
Yeah. I was writing $45,000 quarterly tuition checks. I know, I look back today and I think, how in the hell did I even do that? But we had some income coming in from rentals, and the good news was, in the Great Recession, after a couple of years, rents went up, right? People were losing their houses and they had to go rent, they had no credit. And so all of a sudden, rents spiked in, 11, 12, 13, 14, 15. So it ended up being a great rental market. So.
Okay, so coming out of the recession, what did your business look like? And what were you doing on the investing side?
Well, let's see. After we did our townhouses, I had a friend call me and he said, hey, I've got some land. He was a builder that I'd worked with. He said, I have some land and I want to design it for retail buildings, a pair of brick retail buildings, but I need somebody to help me financially. So I said, I'll do it. And so we stepped in and we did it together and built them, and then I did the leasing and he oversaw the building part of it because he was a builder and he wanted to build. So then we owned those for many years. And in the meantime, I had some land that I bought. I traded a house. Well, when I was at the Hassan Company then, one of the brokers there picked up the lots around the Oregon Golf Club. Yeah. Oregon Golf Club wasn't doing so well, and they decided to sell off the land around it. The guy that developed it was Korean, and he passed away. And so as that was getting settled out, one of the agents in the office had that land listed, and it was pretty cheap. And they needed to sell something, so I ended up buying a 20-acre piece on the golf course there for $325,000, somewhere back in there. And I traded a rental house for it.
Yeah.
And we ended up, it was zoned the way the laws work, to make it a long story short, if we planted a vineyard, we didn't have to go through all the income qualification things for ag. So we planted a vineyard, and then that went well. So we started making wine, and we developed a label, and we had fun with that for about 15 years.
Do you still have it?
No, we ended up selling it.
Oh.
It got so big, I think we started to get...
What vineyard?
Well, it was called, our label was called Schwab Holdings, or no, excuse me, Schwab Cellars.
Schwab Cellars. I didn't realize you had a winery.
And, well, we didn't, I mean, it was at Timberline Lodge. It was at really weird places. It was at Timberline Lodge. It was at New Seasons. It was at, what's a really cool, Stephanie Inn. It was really unique stuff, niche stuff, but it was really good quality wine. So, and then my winemaker actually sold it back east. So we had it being purchased in restaurants and wine clubs back east.
Wow.
But I didn't do that. I just gave him a share of the income to do it.
Yeah.
So, but eventually the harvest got so big that we either had to go big and go in and go deep or get out. So we had decided after all those years that it wasn't a retirement plan.
Yeah.
And so we sold it. I think I sold it in 15 or 16, and then traded it for a building, a 7,000 foot commercial building in Redmond that was in foreclosure. And then I bought a big 5,000 foot, one level home in West Lynn. And because I had to complete my exchange, so I bought the home too. And then, so I added some money to have it free and clear. And then I remodeled it. And my whole goal was I wanted to exchange out of it.
Yeah.
And I think that was probably in 16, 17. And then, you know, with the low rates and everything, prices were just getting so high on commercial. I just didn't see anything that I wanted to buy. And I'm not excited about paying full value on anything. And so we've rented it ever since. But I moved the tenant out last year, and it's been vacant.
Yeah.
I had to get some windows replaced and some other things. So I moved the tenant out, and I'm hoping to sell it, but I don't have anything yet.
I know a good realtor.
Yeah. So I'm looking. But the cap rates are still a little bit high. I've seen a few things that are probably okay, but nothing that I think makes...
Yeah.
You know, it's really hard to make money long term if cap rates are at 5 or 6%. And that's where they were for a while. And now those people that bought things at 4 and 5 and 6% cap rates, what's happened since is expenses have gone up like crazy, right? So labor to do anything has gone up, and so those margins are really, really thin.
Yeah.
And I think when the rates come down, a lot of people are going to sell that stuff.
Yeah.
So that's what I'm hoping.
Okay, so I want to ask you a few questions to kind of wrap this up, and then we'll open it up to the group here. Looking back on your career, starting in '79, what has, kind of two-part, what's been the biggest challenge? Along with that, what's been the biggest learnings? And then the third part, what has been your favorite part?
My biggest challenge, good question. I don't really know.
Yeah.
I honestly don't know what my biggest challenge is.
Okay.
Probably, for most of my career, it's probably having to keep control of it.
Yeah.
You know, I did well, and just trying to keep control of everything was probably the big challenge, because I had a lot of business that came at me that I couldn't do. I just didn't have time. And so maybe it's working on efficiencies, right? I mean, if you're gonna invest in real estate and you have another life, you have to start finding all your efficiencies in your life. So for me, for example, for a while I had a goal that I don't want to buy anything unless it's in my driving range of my real estate. So that if I have to go buy my property, I can go buy one of my listings that, you know, it's a mile away and do some inspections or whatever, and then go buy my listing and make sure they got the carpet in, or make sure the painters got it, or whatever it was. So I for a while I said, okay, everything has to be within 30 minutes of Lake Oswego. And then that changed because, with technology, you can go a lot farther.
Yeah.
So, but yeah, it's probably just been efficiencies, focusing on efficiencies all the time.
Yeah.
Probably that's the biggest challenge. Yeah, it's always changing.
What about the biggest lessons? I know we talked about a couple
My
already.
biggest lesson was probably not having enough money in the early 80s and buying things as fast as I could get down payments, and then that market got hit really badly, and what happened was I didn't make any money. We didn't make any appreciation for years, any substantial appreciation for years, and I was feeding it, which is like torture.
Yeah.
So
you can refi out because rates are going up.
Yeah. So, be careful, make sure you have a reserve. That did temper me on how I invested going forward, make sure I had enough money in the bank if I did anything. And I know a lot of people that just push and go and push and go and push and go, and sometimes it works out and sometimes it doesn't. So I was probably pretty tempered that way.
What about your favorite part?
I think my favorite part was probably in the last 20 years when I made my real estate team 3 people, me and a buyer's agent and a transaction coordinator. And I said, I just want to do 40 deals a year. And I want my average sale price to be 500, 600, then 700.
Yeah.
We could hit that with a team of 3 pretty easily. And that left me lots of free time to go do what I wanted.
Yeah.
So that part of my career I've really enjoyed because I was able to hit my goals financially and not work anywhere near as hard, and coach and go to track meets in the afternoon and coach on the weekends and not have it interrupt my business because I had people helping me. So when I got to that level, I think it was probably pretty cool. A little bit on cruise control.
Yeah. That's awesome. Very cool. All right, to finish up, I want to ask you what you love most about each of your family members, and then we're going to open it up to the group.
Each of my family members?
Correct. So your wife and your 4 boys. What are your favorite parts
So
about?
my wife is...
What do you love most about each of them?
Well, I think what I love most about my wife is she's happy every morning. And I don't have to do anything to lift her up in the morning. She's very happy every morning. And over a lifetime, that makes a big difference.
Yeah.
And so I think it probably starts with that. That makes such a huge difference to get up and have somebody smile and be happy.
Totally.
So that's one of the most important things that I never thought about when I was getting married, but it turns out in my life that's been really cool.
Yeah.
And she's happy when we go to bed. We make sure we're happy.
So she's very positive.
She's a very positive person, yes. And since the kids have left the house, she spends a lot of time on her physical fitness. So she works out pretty aggressively.
Yeah.
Not with heavy weights or anything, but she ran marathons when she had kids. So she's kind of a star that way.
Yeah.
And she's very loving. Yeah.
Very cool.
And then for the kids, my oldest,
Marcus,
he is a mechanical engineer, works at Boeing. And he currently, he's sending us pictures, it just ended, but he was taking kiteboarding up in Hood River this summer because he wanted to do that. He rowed for Santa Clara, and they won the only gold medal they've ever had in rowing. Wow. So he has a nice track record of being a good athlete, and then he's working hard, and he's a very loving kid.
Yeah, that's great.
And always positive. Then Cameron, my number 2, who works with me. he has a lot of energy, he's a very positive personality. I mean, my whole family is, and it keeps you going. You have to be really careful. We've been talking about this lately. You have to be really careful about who you associate with so they don't bring you down. And my wife and I just recently had a conversation about that you have to surround yourself with people that lift you up and not suck the life out of you, because it's really hard to perform at a high level if you're trying to keep other people up around you. So choose your friends carefully and your business associates carefully. And so Cameron is super up. He's very smart. He actually has designed he's been busy. So when the rates went up, my property in Lincoln City, he worked with me, but he did the lion's share of the work, and we just got that rezoned for apartments. It was R7. We just got it rezoned for apartments.
The 26 acres?
Yeah, it's actually, I got an option from my neighbors, so we actually have 30 acres. And so, they need apartments down at the beach. They need housing at the beach, and so
massively.
he did the majority of that. He designed a building on Boone's Ferry, which I'm going to get rebid this year. Hopefully, if the rates come down, we can get it rebuilt really quickly. And so those would be probably two things that are in the hopper. And he's a smart kid, and he's very positive too.
How is it working with your son?
Well, your generation is very good with computers. When I was in college in engineering, I took engineering in college for a year and a half, thinking I wanted to be an engineer. And we didn't have, Portland State had one computer, and it was Fortran, which probably most of you haven't even heard of. And so you had to write your program out on your little cards, and then stick them in and wait and stick them in. And so, the kids today, they've gone through school with the computers, and they're just so fast. And he's just so fast on the computers and finding data and creating things. It's pretty amazing.
That's cool.
And I'm not. I have the experience, so I can offer something.
Yeah. Well, what about your third?
My third son, he's
Connor.
Connor,
yeah.
He has a podcast, and
what do you love about Connor?
He's in glamping. He's a lot of energy. He also is very positive. He's a lot of energy.
Yeah.
He loves to go try different things. He's also been kiteboarding and hiking. He loves the outdoors, so he's super passionate about the outdoors. And so he's moved into the industry of glamping. And he did work for a company doing assessments of those kinds of projects, glamping, tiny home projects in the country. And he had the West Coast. And so he was doing that at a high level, but now he wants to do it himself.
Yeah.
So he's trying to figure out how to do that right now. So he's in between jobs other than the podcast. And then my youngest ended up...
What's his name?
Joseph.
Joe.
Yeah.
And what do you love about Joseph?
He, he had some challenges growing up. He played football when he was in 6th grade and got a concussion. And that kind of changed his trajectory on schooling and whatnot, because he couldn't go to school for 3 months. He was home in bed for 3 months. It was pretty difficult.
Yeah.
And so he's pulled out of it. He did really well graduating. He did really well. He got an economics degree at Santa Clara, and now he works for Deutsche Bank in San Francisco, and he's studying to get his analyst license, so he can be one of those analysts that we read about that give recommendations to companies. And he's doing very well.
That's awesome.
So probably for him, perseverance. I think he's had to persevere more pain, literally physical pain, than any of his brothers by far. And he's just stuck it out. He just gets through it.
That's awesome.
Doesn't get too high, doesn't get too low.
All right, so Dwight, I want to acknowledge you and recognize you. I mean, one, you're an amazing human being, extremely positive. You have, you are a person that a lot of agents in the office aspire to become, right? And so thank you for coming out and sharing your story with us. So could we give Dwight a hand, guys?
Thank you. I hope it was interesting.
Very, very. So before we open it up to the crowd, you mentioned surrounding yourself with positive people, and we talk about this a lot. We actually did an exercise on it, right? Of like who your 5 people that you surround the most with, and then you grade them, right? And so that's a really important component that we all share. When I was a little kid, in high school, my dad told me, you are the 5 people you surround yourself the most with.
Yeah.
Right? Everything, right? What they look like, what they drink, what they eat, how they react to things, activities, all that. I was like, oh, Dad, BS, I don't believe you. Years later, now I'm like, bringing that up with people.
Yeah. I told my kids the same thing. Yeah. So that's good. I think it's more important now than ever. There's just so much noise, especially with the election. There's so much noise happening in the world with social media and our phones and all the political environment that's going on. I think it's more important than ever that you have to make sure that you surround yourself with people that can cut through that and get things done and they stay positive.
100%.
Yeah.
All right, who has some questions for Dwight here? Joel, yeah.
The average price of like a house in Portland being around $535,000 for a 3-bedroom, 2-bath house. Would you still recommend that as the best option for a new investor to get started?
They don't make money right now.
Yeah.
So it's not an option.
Well,
unfortunately.
No. What if you rent by the room, right?
If you do that.
Build some more rooms than you rent out by the room.
Yeah, my son Connor actually bought a home in Bend for like $585 a few years back, and he travels a lot, so he rented each of his rooms out. Mm-hmm. And so he was renting them for $750, and the house was furnished, and he's still doing that today, because now he moved up to Seattle to be near his girlfriend, so he's got his house rented to 3 different people. So you can do that. It is more management intensive, right, because they turn over. His tenants seem to come, they tend to be like 4 to 6 months, and then they move on. And so, it is an option if you're willing, if you have the time to be able to do that. That wouldn't have worked for me because I was working my job full time.
So what would you suggest to new investors then? What would you tell them to get started?
Well, I had an uncle that was a real estate investor, and he told me something when I was in my 20s, or probably 20s. And it's absolutely true. To change your trajectory in your life, you need to have one good deal every 10 years. Now, we never think that way, do we? I never thought that way. I always thought in terms of quantity. But I saw with him that in about the 30 years that I was around him, he would do one incredible deal every 6, 7, 8, 9, 10 years and make 4 times, like 4 to 1 over what he paid. And so right now we're in a difficult market because they raised interest rates when we had all-time high prices. And so you have to be patient because very few things work right now. And that's why I'm not, I'm sitting on the sidelines with things myself. And, look at guys like Warren Buffett who have record amount of cash. He's doing the same thing. He's saving up money. He's selling and liquidating and raising even more and more money because, he wants to be the guy that, he bought Burlington Northern for $36 billion in the last downturn in the Great Recession. Mm-hmm. That's the biggest purchase ever in the day. And now he's got almost $300 billion in cash treasuries. So the timing isn't great right now. It can be if you find the right property, but it's not great for single family homes. And you might have to go, a little further away to be able to even start and get something that's affordable. So I know in 16, 17, 18, the market that was hot for that was Sherwood. I was taking my clients down to Sherwood, and we were getting some really good deals on small 3-bedroom, 2-bath houses. And, now look at Sherwood. They built that high school that's, crazy, beautiful. And so I would just say, be patient. We could have a correction in price. No one really knows how this is going to go. But interest rates are the elixir to make deals happen. And if you don't have the cash to buy things, then you should wait until interest rates come down. Maybe do an option on something where you lock in the price today. I did that once when I was younger. I locked in a price, a 3-year option, and then a 3rd year I picked it up, and prices had gone up about 10%. So I thought it was pretty smart when I did it. So it's just tough. I had a couple projects going, and we got them all designed and got the approvals, spent like $300,000 getting all the designs and the approvals, and I couldn't build either one of them when my timing came out. So I'm just sitting on it waiting to try and start them hopefully next year. Maybe. So you just have to be patient. I mean, you're a lifetime investor, right? So I would think of it that way. I wouldn't force yourself to buy anything.
Do you recommend to people to stay near, I mean, like you were, like stay in Oregon or stay in, Oregon, Washington area? Or do you say, okay, well, how about, go invest in a state where it's going to be lower basis, right?
I think back in 84-ish, I bought 2 3-bedroom ranches in Vancouver. So going to Vancouver is nothing anymore. And I have some properties I want to get out of Multnomah County because we have all the extra taxes in Multnomah County, and get probably over to Central Oregon because the growth is pretty crazy in Central Oregon. I don't see that changing a lot. So yeah, I'd be open to going a little further than trying to keep them right within 30 minutes of your drive. That was an efficiency that I decided on, that was the only way I could really do it, and then sell real estate at a high level. And so that was just a limit I put on it for myself. But if I was not so busy doing real estate, I would have looked further for sure. The one in La Grande, I doubled my money in probably 8 years. Wasn't really worth it. Driving to La Grande is not convenient.
No.
But driving to Bend is kind of fun. So.
What would be your playbook now to buy on option or to buy on contract?
Well, if I could find, I know Cameron has a commercial property that he's been talking to the people, and it's got some old buildings on it, and I thought it'd be wonderful for development. And I've thrown out a 6% contract. I would buy it if we can do a 7-year 6% contract. And I think they're probably getting closer to being able to do something like that. So if I could buy something that was on 6%, you don't want it like 2 or 3 years. I think you need 7 to 10 years. And even then it might be too short, 7 years. Because we just finished a cycle of basically 40 years of rates declining from 1981 when they were 18% down to a year ago or 2 years ago when they were 2 or 3 or whatever they ended up. And so now we've loaded our country up with debt. Now it's fair to say that the cycle will go the other way, which is interest rates in the next 30 or 40 years will be going up generally. And that by itself doesn't mean anything, except you have to just be careful about having things that balloon, because you might balloon from 6% and be at 8%. And then, you kill your cash flow. So an option would be you find somebody, then they aren't ready to sell, but you can negotiate a price today for a closing 2 years from now, and you say, hey, I'll give you $10,000 if you'll give me an option, and we'll close it when you say you're ready to close in 2 or 3 years. And they say, hey, I'll take the 10 and I'll give you an option, and we have those documents, you record it against the house, and then when they move, you have a chance to go in and buy it at the price you negotiated. I've done options where we had inflation clauses in them, right? Where we said, okay, if I close it in the 4th year, it's going to be plus 3%. If I close it in the 5th year, it's going to be plus 5%, whatever. So you can do that too. But there's a few deals that are out there that fall through the cracks. There just seems like there's a lot of people working to buy them, and I almost feel like you're paying a little bit too much for them right now. So the formula, the reason that government raised rates is they wanted to bring everything to a halt. They wanted to slow the economy down. And that's happening, right? If you read about what's going on now with layoffs, lots of layoffs in Oregon. So, we'll see rates go down, and hopefully next year things will be back down where you can get something in the 5s, and then a house works. Get something you can fix up a little bit, carpet, paint, tile, vinyl, landscaping, but it'll always stay rented. Yeah.
That's good. Austin?
Two things. One, to clarify if I heard correctly, you mentioned you had a handful for a team. We're doing roughly 30-ish deals per year. Was that correct?
Yes.
Okay.
40.
40, okay. And then the second was, when you were coming into real estate and growing and developing as a person, was there a particular person that either you aspired to, or were they your rival? They were the best person at the office, they had the most amount of deals, whatever. Was there anyone like that?
Yeah, I think that person for me was probably Mike Hassan of the Hassan Company. He's passed away a few years ago, but he was, he was an awesome salesperson, and I learned a lot from him about communication, and so I would say he had the biggest impact on my career during the 27 years I was at that company. So once I got going and did it for a while, I kind of knew what I needed to do. And the way I broke it down was, if I had a team of 3, I had a buyer's agent who was full-time, and she would sell 15 homes. That was the goal. Sell 15 homes. And I'll sell 25. If you sell 20 and I sell 30, we'll go take extra time off. Mm-hmm. And so for me to sell 2 homes a month, for you to sell 2 homes a month is not hard, mm-hmm. if it's just listings. Mm-hmm. Right? So that's what we did. And it created enough income that I could do what I wanted.
Mm-hmm. If I may ask too, do you know how many deals he was doing back then?
How many deals who was doing?
Did you say his name was Mike?
Mike Hassan?
Oh, back in the day, Mike probably did, he probably did 30 or 40, but then, he had his mother working for him most of that time. And then technology came into play. And then we had cell phones, and then we had fax machines, and then we had, it just changed a lot. But then he focused his time on the company and stopped selling. And he grew the company from 1 office to 5 or 6 offices. So that became his baby. And he stopped selling, I don't know when that was, probably early 2s, 2005, 4, 3. So, but he was a good businessman. He always knew his numbers. He was very positive. Yeah.
He knew everyone.
And he knew a lot of people.
Yeah.
Yeah. Well, you know what? If you work hard and you meet a lot of people, you tend to find Portland's a small market.
Yeah.
When I was doing business at the highest level, my wife and I would walk into a restaurant and I would know 3 or 4 people.
Yeah.
So, but not today.
Kelly?
Do you have properties paid off?
Say that again?
Do you have properties paid off?
Oh, yeah. So for me, like Forest Heights, I think I was telling you that pays off next summer.
No, I didn't hear it. No.
Yeah. So I was getting 20-year loans, 25-year loans, and 30-year loans. And the goal was I wanted things to pay off when I was in my 60s. And so, because if I was hurt and I couldn't work full-time, that would happen for my family. And if I was working full-time, I would be retiring and I would like it. And so I tried to set my loans up where I had certain things paying off. And that's happening.
Smart.
Why do you suggest that an investor start paying off instead of investing more?
Well, I mean, that's going to be up to the individual. So the question was, when do you recommend someone pay things down instead of buying more things? That's going to be up to the individual and what your goals are. I know you and I were talking about this. I always had in the back of my mind the saying that Jesus said, which was, the chances of a wealthy man getting into heaven is the same chances as a camel passing through the eye of a needle. Have you guys heard that one? Well, like I never knew what that meant, like literally.
Yeah, exactly.
But I realized when I was getting busier and getting more things, and I was, on the weekends checking my phone, like, oh my God, did that happen? Did that happen? When you get more things, they take up more of your time. And when you take up more of your time and you divert it to, personal property, right, things, then it's harder to have a high quality life. And that's what that means. So I set limits on what I needed to own. Like I didn't need to own 100 homes. There's no way. There's no way I would do that. When I got to about 15 homes, I thought, this is too much work. I need to get into bigger properties that can be managed by somebody, because I was too tight to have them managed by a property manager. I wanted the cash flow. And so my wife was pre-kids, she was doing a lot of the paperwork with me and whatnot. And I thought, this isn't going to work when we started having kids. So it's your own personal whatever you want. I met with somebody that was about 40 last year, and he doesn't have any rentals. He has 3 kids. And he's probably got 25 years of work left. And we kind of laid out what happens if you have 3 houses paid off plus your residence. You could do the math. 3 houses paid off is, $10,000 a year in rent probably, right? So if they're paid off, you have some expenses, but they're not going to grow as fast as the rent. Mm-hmm. And that's what he set for his goal at 40, was I just want 3.
Great.
So.
Totally doable.
Yeah. I had a lifetime to be able to do this, and there were plenty of times in my life where I just passed on really good deals because I thought, I just don't want one more thing to deal with. I don't need that much to be happy. So, you have to ask yourself that question: is what's important? When you have I've had properties with 12% contracts on them, and so when the rates go down to 8, you're highly motivated to get that paid off, because you don't want to carry high interest rate stuff. You don't even want to carry, interest rates if you can. So, any other questions?
Great question, Kelly. Any other questions, guys? All right.
Was it worthwhile?
Yeah, amazing. Can we give Dwight one more round of applause?
So, one thing we didn't get to is several years ago in 2010, I bought into our Keller Williams franchise.
We didn't talk about that. You're right.
And I was thinking, okay, I don't have many more years of selling, but I know real estate really well, so I think I'll own a majority of a real estate company. So when I joined our franchise that you're at.
When you left Hassan.
When I left Hassan, I said, Mike, I want to own something. Mm-hmm. I want to build something. I want to own something. And I thought maybe 1 or 2 of my kids would get into real estate. Mm-hmm. So one did eventually.
Yeah.
So I joined, and there were 11 shareholders in that office.
Wow.
And so I kept buying shares from people over the years to the point where I'm the majority shareholder now, and we have 3 other, Kareen's now a shareholder, my CEO.
That's awesome.
And but I'm the majority, and I'm the operating partner. So I stopped selling last year, and I'm just managing the office. Mm-hmm. And so I'm...
And your investment properties.
And my investment property.
Yeah.
And like I said, we're teeing up some properties. Hopefully we can start next year.
Yeah.
And then I have a couple of investment things I want to exchange into other things. So I have plenty to do, but I need the window to open back up. When the window is open, you have to do a little bit more. And when it closes or it gets tough, you just have to sit tight. And right now, real estate in Portland is really hard.
Yeah, you got to get creative.
Yeah.
You got to get creative. That's great.
Okay.
Guys, no need to rush out. Feel free to network as long as you'd like. There's more drinks and pizza in the back. and I'm sure everybody wants to come up and talk with Dwight. All right, thanks, guys.
Thank you.
Yep.